Amitabh Chaudhry joins us now, Managing Director and CEO of Axis Bank. Morning, Amitabh. Good to connect with you. What should we start with? Future outlook or max deal?
Anything you want, Nikunj. You're the boss. You still the same building, so you can be eating.
No, so let's understand the numbers, and I'm just going to break it for the benefit of our viewers. What should we be ideally focusing on? The number for the quarter gone by, or the kind of guidance and provisioning which you've done? Because we are in an uncertain world. And how does one really understand that where Axis Bank is headed in terms of the COVID impact?
Well, I think both need to be looked at. If you look at our franchise, the quarter gone by is important to look at. We continue to do extremely well in building a granular deposit franchise. Our loan growth in the last quarter was solid. We obviously continue to strengthen our capital position. If you look at the kind of provisions which we have made and continue to strengthen the balance sheet, I think if you, for example, look at the provision coverage ratio, we have taken it to 69% now. We have over and above that 6,000 crores more of contingent provisions. So we have left this quarter with a solid franchise supported by subsidiaries also, which are doing exceedingly well. A great capital position to be in, which is a decadal high, and then also provisions, which now are at about 1.3% of standard book against 0.5% required by RBI, and a 69% provision coverage ratio. So we are well placed to capitalize on as and when the economy opens up. And it's not that we're just waiting for the economy opens up. As and when opportunities are coming up, we are capitalizing on them too. TLTRO, how Axis Bank acted on it, and how quick we were in terms of grabbing that opportunity, just demonstrates that we are out there, we are hungry for business, and if the right opportunity comes along, we'll go after that too. So I think that is just kind of summation of what we have achieved in this quarter and what kind of the future holds for us. Yes, obviously, we have taken an important call to make a COVID provision of 3,000 crores. If we were to look at providing for accounts which would have gone into NPL by March 31st, we would have been required to make a provision of only 74 crores. If we were to look at all the accounts which were given a moratorium, that means DPD of more than zero as of March 1st, and assuming all of them would have gone into NPL by May end, the amount would have been 1,120 crores odd. So the COVID provision obviously more than covers for it. And we have done that because we believe it's the right thing to do, it's the proven thing to do, because when we look outside in terms of economic activity and what is going on and when the lockdown could be lifted and the uncertainty around it, it was important that we make a provision, and that's precisely what we have done.
Okay. If I look at the breakup of your loan book, retail is 50% plus. Now, right now, because of the moratorium, you don't know where the retail delinquency would come and where the retail delinquency would not come. What is your understanding? Because the loans where you've given, I'm sure you have access to their bank details and the bank balance. Do you think that the moratorium would be handled very well, or you see a big uptick in retail delinquencies?
So we have said that, in case of, as far as our retail loans were concerned, we had, depending on the asset class, both things happening. In some asset classes, we gave them an opt-out, so we gave 100% moratorium, and if someone wanted to opt out, we gave them that option. And on the large part of our loan value on asset classes, we gave an opt-in. So when we go and analyze the data, which we're doing practically on a daily basis, what we are seeing is that the quality of borrowers it still remains very strong. The credit scores are strong. When we cut them across the kind of borrowers, geographic locations, we don't see any difference. In many cases, because we, a lot of the, in our retail side, a lot of the customers are our existing customers of the bank, we see savings account balances which can easily pay 1, 2, or even 3 MIs. So, and as we talk to these customers, one thing becomes quite obvious, that they are just being cautious. Like we are being careful in the lockdown, they are also being careful, and they're conserving cash just in case they might need the money for any emergency or exigency. So I think a lot of people are willing to pay that extra bit to just ensure that their flexibility. And as and when the lockdown lifts, we believe that most of these customers will come back, and there should not be any problem. We believe that we have one of the best-in-class retail asset portfolios in the industry today, and if we suffer, then others will suffer even more. I think it will all depend on how long this lockdown lasts and what the impact of that on the individual borrowers would be, because either they have to go through salary cuts or they might lose their jobs, or in some cases, the self-employed individuals will lose their business. So we have to watch out. We are watching it very, very closely, but it becomes very difficult to predict at this stage because we don't know when the economic activity will come back, when the lockdown will get lifted, because all kinds of newspaper reports exist. And I think the governments also are struggling in terms of how exactly will they open up. Hopefully, there will be more clarity post May 3rd. But we are hoping that the government realizes that I think the lockdown does need to get lifted because the cost of just keeping the lockdown on is rising and rising rapidly.
Okay. There is a genuine fear that a lot of small banks are losing deposits and they are migrating to large banks like yours. What has been your experience? Are you getting a lot of deposit from other banks?
Quite well. During the lockdown period, our growth is continuing. We are obviously struggling to sign up new accounts, or even the pace of that is not too bad. But yes, the deepening of balances on the existing accounts continues to show a lot of promise. I don't know. It's very sometimes difficult to analyze as to how much it is coming from some of the smaller banks. It's very difficult to know that. And there is no point in doing that much of analysis because it's not really going to help. You need to be in touch with the customers and just support them during this crisis. And when they see you as the right bank, they will bring them balances from all kinds of banks, big or small. But yes, I think crisis of this kind tends to speak to larger, solid, and safe institutions. And I think that trend is visible even in the financial system. That's precisely, I think, what is going on. I think it will be incorrect on my part to say anything more, but yes, it would tend to favor the larger institutions.
The LTRO2 did not get a resounding success. Is that an indication that banks currently are completely risk averse?
Well, because the thing today is that all of us, we also said in our commentary that for us, conserving capital is more important than just growing our balance sheet. Because, we don't know how long this crisis will last and what the impact on our overall book could be. So when we are trying to conserve capital, we would like to, lend to people where the risk weighting is lower. That means they are better rated borrowers. The loan is secured. And the rating is obviously in many cases, it is very difficult to even assess today what risk are you lending to. Given the crisis, how do you assess how bad or good the risk is? Because in many cases, the person or the company on the other side itself does not know because the numbers of the past are meaningless today. So in that sense, yes, there is a flight to quality. There is a flight to better, rated borrowers, both corporate and the individual side. And yes, as a result, banks are not willing to take the kind of risk they were willing to take in the past, but that is a natural reaction to what all of us are going through anyway. I think our shareholders have not given us the mandate to go and just take on more risk and lose money in a very short period of time.
Okay. What is your understanding of the MSME and SME loan? That's where the black hole or that's where the concern is.
You're absolutely right, Nikhil. When you look at the moratorium data, we are seeing the max amount of moratorium because coming from the MSME and SME sectors. In many cases, the SME units are shut down. They are paying the salary, so it's almost like 100% expense, 0% revenue situation. And in that case, there are absolutely no condition to be paying the interest. Anyway, that the SMEs tend to be more leveraged, and so they live hand to mouth. So all of us are hoping, and I think government has also been given hints that they will come out with some kind of package on the MSME side soon. The government has to step up and actually write some checks for the SME and MSME sector. I do hope they do that because that will be required to kind of restart. But if this crisis continues for long and economy takes time to revive, yes, you will see the loan losses in this sector rising and rising sharply. I don't know what the number would be, But it will be very difficult for me to stand here and say that, no, it will be all fine. I don't think it will be fine.
When we spoke to Infosys, Mr. Chaudhry, Infosys management told us the following, that we are not in a position to give a guidance because we don't know how the shape of the world and economy would move. Can I say that investors and analysts should not expect for anything concrete and any guidance right now because nobody is in a position to give anything very authoritatively?
I completely, it's difficult to give a guidance. We don't know what will happen tomorrow. How do I give a guidance of 3 months or 1 year down the line? We are all, reacting to what is happening on a day-to-day basis. Yes, it does not mean that that's the only thing we are doing. We are using this opportunity to look at what are the 10, 15 things we should be doing as an organization to first create a platform to capitalize on the opportunities that might open up in a post-COVID world, to capitalize on the opportunities which will open up during this crisis as government comes in with some kind of support and is looking for banks to step up. And also at the same time, use this opportunity to train our employees, to use this opportunity to go and reach out customers digitally, to obviously then beef up our presence on the digital side and spend money there and get ready for this post-COVID world. So it's a combination of getting ready. It's a combination capitalizing on the opportunity as and when they come up. And it's obviously also ensuring that you are doing all the things necessary to protect your employees, to protect your customers, and strengthening your balance sheet so that the customers trust you, and teams that are working with the institution which will come out stronger at the end of this crisis. So, we are basically doing all those things here.
So I have a lot of questions for you, but I'll restrict you to next 2 or 3 questions. I know you've got a busy morning. Max deal, 29% stake. What's next? When do you expect the regulatory approval? And when will you officially share details of the price and the clauses in terms of the put clauses you have?
So we are obviously going to approach the regulators shortly. There are 3 key approvals required from RBI, IRDAI, and CCI. It is a structured, this deal involves 3 entities and it has, a lot of waterfall, a lot of structuring within the deal. So I do believe it will take time. My expectation is somewhere between 4 to 6 months. Obviously, we'll keep the markets updated on the progress of the deal as we go along. We have hinted in our call that if you look at the pricing as it stands today, obviously we'll determine the pricing once we get the approvals, but if you look at the pricing as it stands today, it is close to 29 to 30 rupees, the price at which we'll buy the shares of Max Life. So that we have kind of already revealed in the market. As far as other parts of the deal are concerned, once we get the approvals, depending on what approvals we get, we'll obviously share with the market at that point in time.
But eventually, what kind of relationship you will have with Max Financials? You stop at 30, will the strategic things start kicking in? How should one look at the long-term prospects of this deal?
So we are going to become a promoter in the company along with Mr. Anuljit Singh and MSI. And we believe that anyway, we know the group extremely well. We've been working with them for the last 10 years. We have had an excellent relationship through these last 10 years. We are obviously hoping to build it as we go along. It is a well-managed company. It has a very strong board. We will have the right to appoint 3 directors on the board. And our hope and intention is that the management will continue to be supported by the board so that it can become and come out even stronger than what it is today. The Axis partnership, the long-term partnership and the equity stake will obviously allow Max to completely reposition itself. And hopefully it will add value to all the shares of Max Life and in the process also take Max Life to a kind of a different orbit, hopefully. So we believe it's a great deal for everyone involved. And once we get the approvals, obviously we are hoping that, this will give us an entry into a very large and a growing sector in India and continue to strengthen our strategy around the subsidiaries and add value to the overall Axis Bank franchise. Please understand, we have sold Max Life policies to 19 lakh customers of Axis Bank. So it just, with our name getting added to the tagline, it just continues to reinforce our positioning in the overall financial services space.
Okay. Last question. We've launched India Revival Mission on the Times Network yesterday, where we are, in a sense, arguing, debating that can India really afford a lockdown? As CEO of Axis Bank, as someone who understands businesses, industries, sectors, what is your sense? If I have to ask you a question, that can India afford a lockdown? And if no, what should be the plan in place for the revival?
So firstly, let me start by saying that obviously government is fully aware of the fine balance they're trying to drive between keeping the health of the nation in mind and at the same time keeping the economic situation in mind. Right now, till now, they have taken the call that no need to go through a lockdown to protect the health of the nation, and we can afford this lockdown in economic terms. Yes, as the time is approaching, all of us are battling this question: how long? How long can this continue? And I think, because you have been, as you started this drive and this exercise, I think we are all coming to a point where we believe that in the next couple of weeks, sometime in May, the lockdown does need to be lifted, because otherwise the economic price will end up paying will be much more, and we are preserving the health of the nation. The problem is that this virus it spreads fast, it is asymptomatic, and do we have a health system in place where the people with COVID infection lining up outside the hospital, can the health system take care of all of them? So it is not an easy answer. I think the government also realizes this. The noise which seems to be coming out, or based on the statements we are hearing from the Prime Minister and the Chief Ministers, it appears that we are gradually, slowly moving the needle towards opening up more and more, except in the red spots. And I hope that does happen. Otherwise, the economic crisis will be so steep that it will be very difficult to recover, or will take a very long time to recover from this crisis economically. And that would mean that we will be destroying a lot of families and businesses permanently in the country if we don't open up. So I think the solution is not far away. It is not an easy solution how to come out, but they're very smart people working for the government, and I'm sure they know exactly what they're doing and how they need to lift the lockout.
All right, sir. Appreciate your time. Have a great day. Stay safe, and certainly hope to see much more of you going forward.
Thanks a lot.
Let's take a